don't have the graphs, unfortunately, Jean Francois, but we know that there's been a tremendous gold rally, the highest prices in recent years even.
Yes, and what is quite interesting is that unlike at the beginning of last year, when we had the previous test above $1,000 an ounce, this time it's happening in an environment where inflation is extremely low. Whereas you remember at the beginning of last year, we had fears of inflation. Yeah. So obviously, even though there is more confidence that the economy is recovering, even though we've seen some renewed appetite for risk, some money going into equities, somehow something is not right, obviously, because investors want to hold gold. And it's not just a supply-demand issue. My suspicion is it has to do with the dollar weakness. It has to do with some question marks being asked about the economic leadership of the US in the future, and about really whether the Federal Reserve and US financial institutions will emerge with the same credibility as they had before the crisis.
All right, so many analysts are now saying there is no way that gold is going to go below the current levels. So now it's a question of how high it can actually rise to under the current economic situation. Some are actually putting their money on $1,100 an ounce.
Well, it's very difficult to make a forecast, but it's equally risky to say that there's no way that gold can come down. You know, I suspect at the end of the 1980s, when gold also reached its previous highs, people say, well, it was never going to go down again. And then we went down to like 300, 350. We ushered in a period of the great moderation, you know, stable and steady growth, low inflation, which was obviously low for bad news for gold. Instability, gold thrives on instability, but who knows, maybe the next couple of years usher in some period of stable markets and people move away from gold. My feeling is there's still a lot of international issues unresolved, and gold will probably remain well supported, but remember, it's a very volatile commodity.
Right, having hit 1,040 yesterday, many people are saying the driver of that price was the weakening dollar, and we've just heard reports, although conflicted and contentious, that Gulf states are looking at the possibility of trading oil using another currency or a basket of other currencies other than the dollar.
Yeah, so there's been talk about that for the last 20, 25 years, especially in periods when oil was quite strong. It accumulated relatively strong oil price and a relatively strong dollar price. Where other Western nations often say, well, why do we have to pay oil in dollars? The issue of a basket is not a new theme, but obviously it resurfaces every now and then. And if we are in a situation where international investors are concerned that the dollar over time will be debased, will be devalued just because the United States has high liabilities in US dollars and may struggle to service these liabilities, to pay back these liabilities over time, then alternatively all these investors, public investors, sovereign wealth funds, in particular in the Gulf, who hold dollars, might be thinking, well, I mean, we might want to diversify. They can always buy it in the open market. Another way, of course, would be to charge for oil in a basket. But that's something that if it happens, it will happen over a long period.
But you know, even though you're saying this has been talk for the last 20 years, it seems to be talk that's gaining a lot of momentum in recent months. China has raised this issue at a G20 level, saying they're heavily invested in US treasuries. In fact, they're the biggest creditor to the United States, and they're worried by the volatility of the dollar because it impacts directly on the bonds that they hold or that they've invested in the United States. And so this kind of becomes a chorus adding to the Chinese call, and the fact that the IMF is having to look at questions around special drawing rights probably suggests that there's going to be some sort of movement, maybe not this year, but in the near future. There might be.
Look, as I say, the talk is not new. The volatility of the dollar is not new. Ever since the end of Bretton Woods, really, no proper anchor has been found to the international financial system. The dollar has been volatile in the 70s, in the 80s, in the 90s, and in the current decade. What has changed really is that the holdings of dollars by public institutions abroad, by sovereign wealth funds, by Asian central banks, by Middle Eastern funds has gone up so much that sooner or later they say, well, do we want to hold all our assets in that volatile currency with the potential to depreciate? No.
Okay, let's bring the issue back home. The local markets also sort of joined the party, the global market, where everything surged in the region of 1.52%. South African Reserve Bank is due to release its reserve figures today, and the expectation is that after the governor and his team went on an aggressive buying spree of foreign currency, we should today hear a figure that says South Africa's foreign reserves are somewhere in the region of $38 billion.
Well, I mean, we will see how much they bought. You know, they say they bought. They say there was a change in approach from the previous month, where they did very little in the open market. Look, one of the consequences of the weak dollar has been this search for yield elsewhere, this search for returns, and the rand being a relatively high interest rate currency and a commodity currency has benefited, which might make sense from a current market point of view relative to other similar currencies. The rand is sort of like holding its ground. But from a point of view of the macro picture, if you consider that we have a relatively weak economy with inflation, which is somewhat higher than most of our partners, with competitiveness of our exporters, which who have been struggling, it doesn't make sense to keep such a strong rand. So it probably is the right thing to do for the Reserve Bank to cream off the dollars, in the word of Mr. Mbele.
I mean, we're going to have a more detailed discussion about how you stockpile and build up on reserve, but apparently what's going to influence the South African reserve position today is the recent bond issue for South Africa, where we've been able to raise or get pledges to the tune of about $1 billion. US dollars. We still need to see that money come into the country, and also reallocations at the IMF. So effectively, we should have seen an accumulation of about 500 million coming into the countries, 500 million rands.
No, my feeling is that the reserves probably went up by about $1 billion, a little bit more, because as you mentioned, the proceeds of the sovereign bond issue, the second tranche of the SDR allocation from the IMF, much smaller than the first one, but still about like 200 million US dollars. And also our gold reserves will have revalue on the month. So even if the headline figures comes out and say like 1.1 billion, that doesn't mean that they bought $1 billion in the market. My feeling is that maybe they bought $400 million, which would be a step compared to the previous few months. But let's not be fooled by the headline figure. There are some technical factors at play.